In this presentation, we will take a look at part 12 of our C Corporation comprehensive problem, this time looking into an M1 related to the federal income tax. Here we are with form 1120. We're first going to do what we would do before any kind of adjustment at this point in time in our process. That's first to check that we're in balance, and then when we go into the adjustment, we'll be able to bounce back to this point in time. If there's any problems, we're going to go to page 6 of the 1120. We're checking to be in balance. This looks like it's the same as that. Those two numbers match. We are in balance. Take a look at the net income, 14615 for the book. Let's go down and say we're saying that's going to be the 14615 in our Excel worksheet and the 1418629. And we have the 1418629. So it looks like we're okay there. So now we want to be considering this item. We're looking at the federal income tax. Now, we're not going to get into the calculation of the federal income tax because if you're talking about generally accepted accounting principles, you could have a timing difference as to what the tax is. So note then, that means that the tax that would be calculated for generally accepted accounting principles may be different than the actual tax that's going to be paid on the tax return due to the timing differences that are going to be needed to be recorded. We're separating here from the book transactions, which would be like basically the adjusting journal entries. You'd have to do an adjusting journal entry related to the income tax, just like, other types of adjusting journal entries. And the tax preparation, we're focusing here on the tax preparation. So we're going to say that the federal income tax has been calculated. We might go into a little bit more detail in another section on that particular calculation because it is a little bit more confusing and applies, of course, directly to income tax, but again, it's something that is going to be done on the accounting side on generally accepted accounting principles, even though there's, of course, the federal income tax component on it. Now, when we think about the federal income tax and go back to our tax return, go back to page 1, note that, of course, the C Corporation is going to be paying the federal income tax. So it doesn't really make sense to put the federal income tax on the income statement of the C Corporation on the page 1 of the 1120, because page 1 of the 1120 is trying to get down to net income, at which point we're going to calculate the federal income tax here on a tax basis. So what happens then on this calculation for the federal income tax for the books, we're going to need it for the books, but it's not going to be on the first page of the 1120. Therefore, we have an M1 adjustment. So we got an M1 adjustment, which we're going to go over to page 6. We're looking then to have the M1 adjustment down here on Schedule M1. Then we'll see up here on line 2, that's where it will go. So let's see if we can enter that in place. We're going to do this in kind of an adjustment. This is going to be one side of it. And the other side, you'll recall, we kind of forced it to be on page 1. In other words, if I go back up to page 1, remember, it's not supposed to be here on the first page, but our first goal, our objective was to tie in to the bottom line number on a book basis and then do each of the M1s as we go. Because we had this amount in our book income statement, we temporarily put it into the other items down here. So if we go into the other items, that would open up for me. There it goes. It's going to be the 260,000. So our journal entry then is going to be to remove it from this location, and the other side basically go into the M1 adjustment. That should put us back in balance. Let's see if that is indeed the case. I'm going to do the M1 first. Let's go to page 6 again, back to page 6. Then we're going to go down and we're looking at the federal income per books. I'm going to right click and jump to that. Nice feature within Lacert. So we're going to jump to the data input screen. And we'll put the amount here. I believe it was 260,000. 260,000, yes. Okay. Now we're going to jump back to the forms and see what happens. What happens? The 260,000 shows up here. If we scroll up, are we still in balance? No, we're not in balance. That's to be expected because we've only done one side of the transaction so far. Let's go back up to page 1 and see if we can find that other side of the transaction, which we said was here in the statement 2, which we need to remove the federal income tax from here. I'm going to right click and jump to that data input screen. Scrolling back down, and we want that other items down here, other items, there they are. Now, I'm actually going to write this in there with an M1. I'm going to say, hey, this is an M1 adjustment so that we could see it. You may even want more detail than that, to kind of tie out to your Excel worksheet. So if someone's reviewing this or looking at it later, they can take and tie it out. However, this will show up on the tax return when you print this, And therefore, after review, you may want to delete it, because that'll be cleaner when you send it into the IRS, or you could keep it and send it in. It probably, isn't going to hurt anything either. But we could see the two sides of the transaction. So then we're going to go back up top or back to the forms. If we can see within the forms now, you can see now we have these two items. This report would be going, some of these reports would actually go to the IRS, so it looks a little bit messy, but at the same time, it gives you that more detail. So I'm going to close this out. Going to go to page 6, and we're going to say what happens now. Are we back in balance? We're back in balance. So that looks good. Now we need to do this in Excel and see if we can reflect the same thing, and then we'll check our income numbers from the book to the tax on the income side of things. So we're going to go back up top, or back to Excel, and back to another window, and we're going to go to Tab, or T, because this is going to be a tax journal entry, which most of our journal entries here will be concentrating on tax journal entries as opposed to the adjusting journal entries. I'm going to make a new comment. Well, that's not a comment. That's not what I wanted to do. I'm going to right click. I'm going to have a new note. Let's make a note. And this is going to be a record M-1 for federal income tax. So there we have that, and then I'm going to scroll down, and we're going to put this into the federal income tax. We need an M-1 down here. Here it is. That's the one I want. That's the one I want. So we're going to put it down here. What's going to happen then is when we calculate the net income here, it's going to pick up all the numbers, and over here, it's going to be removing. It's not picking up the M-1 and adjustments down below. So that's going to be our strategy. So I'm going to go back up top, and I'm going to be saying that this will be equal to, and we will then pick up the income tax per the books for the M-1 adjustment, and the other side will be going to the federal income tax. The amount will be that $260,000. That's going to be the debit and the credit. Let's journal entry this one out and see how this makes sense. This is basically what we did on the tax return. We're going to go to the income tax per books for the M-1 first. That's going to be down here. That's going to be right there. That's in cell Q47, where we will say equals, and then I'm going to scroll back up, pick up that debited amount for the 260. There it is there. Now, again, that's not included in the calculation of the net income on the tax side, and it's throwing us, of course, out of balance until we record the other side, that being to the federal income tax. This side, there's the credit. Here's the federal income tax, the green one. That's the one we're working on. That's going to be in Q43, where we will say equals. Scroll back up. We want that credit balance. Now we're picking up that credit, that $260,000. That brings us back down to 0. That then puts us back in balance down here. Let's go ahead and check our income numbers. If we go back to our tax return, page 1, bottom line of page 1, we have the 1678629, and we have the 1678629. That looks good. We're looking good so far. And again, note that this doesn't match, the book tax doesn't match the total tax. Now, if you have a smaller C corporation where they do match, you can actually use accrual function within the software. In other words, if your books are kind of like on a tax basis, then you would think that the tax would be this, and you can use the software to kind of help you with the accrual. I'll show you that in a second in this particular software. So then we're going to go to page 6, where we have the book amount of the $1,461,500. So that's going to be the $1,461,500, and then we have the $1,678,629. So that's the $1,678,679, and then of course the adjustment or the difference between the two, in this case being that $260,000. $260,000, if we go back here, is being reported by this M-1 adjustment, and again, it's picked up in this case by us basically not including that item when we calculate the tax income. And you can see how we can have something still in balance here. We can have a worksheet that kind of shows this in a more transparent way. If we go back to the tax return, note if I go to another input screen and I was to use the accrual federal tax function, then it would help us to basically make the accrual of the taxes. It would help us basically to generate by clicking on this item, or one of these are the methods we could use to accrue the taxes. So just that's another function that you can take a look at if you happen to be using Lacert. Other softwares probably have a similar type of function related to that accrual process. In other words, it would basically make this M1 for us if we were to use that accrual process. So everything looks good going forward.